Hey, what's happening, guys, and welcome back to another YouTube video. So this YouTube video is about that word that no one likes, but it could be approaching us real soon, and that's recession. I was at my family's house a few days ago and everyone's talking about inflation, energy prices. Are we going to see a recession? Everyone keeps asking me, and I thought, what a good time to make this YouTube video. Let's go. So guys, let me firstly start off by explaining what a recession is for all of those that do not know. Now, by definition, a recession is a period of economic decline, and the best sign to declare a technical recession is when an economy, a GDP, has a negative 2 quarters after each other consecutively. The economy basically, that means, has shrunk by a 6-month period. So as well as that, guys, there are 4 data pieces in total we need to look at along with GDP. Number 1, real income. Number 2, employment. Number 3, manufacturing. And number 4, you got it, guys, retail sales. Now, if these 4 indicators are all on the decline, most likely GDP, gross domestic product, will also follow suit. Recessions typically last around 12 months, and on average, a country's GDP tends to fall around 2 to 5% over that period. Now, think about that for a second, guys. If businesses start to slow down, the people that work there, now they might default on their mortgages and loans. And of course, they'll have less money to spend in the economy, less money in shops. And it's a vicious circle which leads to a lot of businesses going bankrupt because no one's spending at all. So guys, another key thing to look at is the amount of people employed in the manufacturing sector. This usually shows me, it's a bit like a lagging indicator of how the economy is shaping up. If the manufacturing sector starts to slow down, it usually can play out into the economy. And this is where this all important PMIs kick in. If you don't know what PMIs are, go ahead and check out the AstroFX website. It's all in my fundamental course. So guys, the question, should we be worried? And yes, we should be worried. And then for this example, I'm going to use the UK because there's a lot of things to talk about. So guys, with inflation spiraling out of control, guess what? That's pushed up the cost on goods of everything. Now, do you blame the pandemic for this? Maybe blame the Russia story. Looking across at all major news websites, TV channels, and especially the government, it looks like everyone's trying to blame the inflation on Russia. However, if you've been following macros for a while, you'd notice that inflation has been a problem for some time now. And the real truth is, no matter who you're going to put your fingers at, it's here and it looks like it's here to stay. So guys, before we go any further, I need you to know, did you know real wages are down by 1%? That's why you're not seeing that story anywhere. No one's talking about it. Now, what is real wages, you might be asking? Well, think of it this way, guys. If your wages went up by, let's say, 3% and inflation's at 4%, guys, you didn't get a pay increase, you got a pay cut. Sounds harsh, I know, but this is what's meant by real wages. It's really, what are you going to get for your money's worth? What are you spending it on? What can you afford with it? So this means the average person will be spending a lot less. The average rate of spending is going to drop. And the local supermarkets are going to be affected. Even you going out having a drink, even you spending money on small businesses, it's going to put a lot of people out of their jobs. Now, jobs are, of course, guys, hopefully you know this, are the backbone of any economy. Take that away and you ruin basically everything. So the Bank of England actually this week have raised rates again for the 3rd time since December. Now, this is to actually help reduce spending and businesses that are borrowing. Now, if you tie that with high inflation and wages dropping, boom. Then we've talked about the R word, and that's recession. So this Wednesday, the 23rd of March, is a very, very important day. Why? Because we have a new inflation print. And this is crucial, especially on the same day when the UK are going to be announcing their spring budget. And by looking at it, the glass looks half full, guys. It's like looking at a car, but you need to look at the bonnet, see what's really going on. What are they not telling you? Well, why would the government tell you? They need you to have consumer confidence to continue. Otherwise, the bang can happen a lot sooner. Now, inflation in the UK is around 4.9%, with several economists saying that we could be in double digits by autumn this year. Guys, the buying power of the currency is what you should be worried about, and that's something the government official not telling you. So with a figure at 4.9%, let's say if we got a figure around 8%, I'm predicting it could be that. That could be a 60% change in inflation compared to last year's print. 60%. This will be crucial for everyone, from business owners to homeowners, the average person even queuing up in the morning to get a coffee. Now, the most important charts are the ones I'm going to show you in a minute, and these are straight from Bloomberg, and I often look at them, and they're the consensus for GDP growth and the consensus for UK inflation. So guys, this first chart, which should happen here, is showing you the forecast of GDP, and as you guys can see, look where it was, and look, it's tanking right now. And the next chart It shows you the continuous skyrocketing of inflation and expectations of where it could also be. So guys, we need to have a bit of a step back and think. Are the Bank of England going to do something about it, and when will they? They simply can't continue to like this, and to be honest guys, they have to pivot from all of these hikes. What does this mean guys? The pound could be destroyed. Now, I'm not saying that the government is wrong. The unemployment is around 3.9% in the UK, which isn't bad at all, but what they aren't telling you, if I had some money right now, it's real wages guys. It's what you're actually getting paid. I'm a homeowner, let's talk about it. The housing market is getting a bit bubbly. It's too inflationary. Now if wages are dropping, interest rates are rising, growth is shrinking, guys, the bubble can easily pop. Now, what can you do to hedge yourself against a recession? Very, very important. Guys, note this down. Definitely don't be buying any beta risk assets, not right now. However, look at the dips. I'm telling you right now, the dip is coming. And so don't buy at the highs. If you're buying houses, cryptos, do not buy at the highs. I personally, right now, I'm sitting on some cash and looking to invest in them when certain dips happen in the markets, and they'll be happening very soon. And for all of you FX traders out there, what does this mean? How can we capitalize? Guys, I was just looking a minute ago, pound Aussie has dropped over 1,400 pips in the past few weeks. Cable is trading back at 1.32. And one of my favorites, guys, one of my favorite happens to be trading at great level resistance, which is at 157,500. And as you guys guessed it, that's pound yen, which is trading at such a good level right now. And I personally be monitoring for a short position. I might have to wait a little bit, but as soon as I'm ready, you got to short that thing hard. All we're waiting for is an intervention from the Bank of Japan. And the pound yen is going to be toast. And I spoke about this more in Astronomics, guys. If you haven't already, link is in the bio. Go ahead and join. We should tell you everything you need to know every single morning. So guys, that's it. So I'll see everyone in Astronomics. It's the #1 place to find out everything you need to know macros to keep you one step ahead of the markets. Now guys, I need to pack my bags. I'm always flying in and out. One of my friends were nice enough to invite me to the Formula 1 in Jeddah. So I'm on the way to Saudi Arabia in a few hours. And guys, believe it or not, I don't watch F1, but don't worry. I know who Lewis Hamilton is, and I've got a nice few things to watch, try and learn Formula 1 on the flight there. Guys, see you on the next video.
Down for me, say, hold it all the way down. Hold it down for me, hold it down for me. Say, hold it all the way down.